But first, here with me now is certified public accountant Tony Huffman with Huffman & Company. Tony, as always, thank you for joining us today. We are so enjoying the tax tips, and we get so much good information from you. So
well, thank you.
Thank you for coming.
I'm getting some good positive feedback from viewers too.
Wonderful, wonderful, because it's really getting, you just don't know. This year it's this, and then next year it might not be. Well, what we're going to talk about today is charitable giving. So it's really like, how do I know if my giving is going to a tax-exempt charity? And is my gift potentially tax deductible? How do we deal with that?
Well, let's first start off by saying that Mississippi has preeminently been in the top givers in the entire nation every year. If you go and look at the statistics, Mississippians
to know that.
give and give and give, and they don't do it because they get a tax deduction. They do it because they believe in the charity they support. So
absolutely.
But how do they make their charitable donations tax deductible gift? And I'll say this off the start: not everybody who makes a charitable gift will be able to tax deduct that gift, because back in 2017, when the tax law changed, it raised the standard deduction for everybody, and itemized deductions include charitable giving, mortgage interest, property tax, all came in together. And so a lot of people who were giving found out they no longer got a benefit of their charitable donation. So we saw a lot of that, but it didn't stop people from giving. So that continues to be one of the big things we see on everybody's tax returns. We get the goodwill receipts from everybody, and we get the church receipts from everyone. So, but one of the things I did want to talk about is how do you know if your charitable donation is going to a tax-deductible donation? And there's a difference in tax-exempt organizations and charitable tax-exempt organizations.
Tell us about that.
Well, so there's a lot of different types of tax-exempt organizations. Homeowners associations are tax-exempt.
Really?
Right? And there are
I wouldn't think that way.
Membership organizations are tax-exempt.
Okay.
And then you've got your what we call the 501c3 organizations. That's just a particular section of the tax code that signifies charitable tax-exempt. So you want to make sure that who you're donating to is a 501c3 organization.
That's good to know.
Churches are automatic 501c3 organizations. And then the IRS has a link on their website. If you go to irs.gov and you go click on the tax-exempt organizations, you can actually look at all the organizations that the IRS designates as tax-exempt charitable organizations, and you can confirm that who you're donating to is a legitimate charity, and that your deduction would be, or your donation would be, tax deductible.
Okay. Is it difficult to itemize? Is that hard for people?
It's getting harder, but so look, if Congress doesn't extend the 2017 tax cuts and we go back to the previous rules, then I think there'll be a lot more people itemizing. But yeah, for a married couple, your itemized deductions have to exceed roughly $40,000, and so unless you're doing significant charitable giving or you have significant mortgage interest, you're probably not seeing a big benefit from your charitable giving, which is why I like the idea of bunching. So if you're close to itemizing in one year, then double up your charitable giving for that year, right? Give next year's giving in that year, or push next year's giving.
So you can get
over the level, and you get a benefit of that.
Well,
so
that makes perfect sense. Just go ahead and do it.
It's kind of a way to manage those and just see if it makes sense to bunch together in this year or bunch together in the next year.
I see, and you maybe could do that every other.
Yeah,
you know, if that's the way.
Until the tax law changes again.
Until the tax law changes. Let me ask you about volunteerism. You know, people volunteer, and when they get out there, you know, it could be rescuing animals, it could be teaching Sunday school. Tell us about, there's things we might not think of that are tax deductible. Is it gas that you go and use, or
actually there's the IRS will allow a standard mileage deduction for the miles you have driven related to charitable work, in addition for any actual expenses that you incur related to that charity. So you and I were talking before we came on air about Sunday school. If you teach Sunday school and you're buying food for the kids, or coloring books for the kids, or even Bibles for the kids.
Exactly.
And you're not reimbursed, then that's deductible as long as you're able to itemize your charity. So it's just part of all your other charitable giving.
That itemized is really that's the key. That's the key.
And then don't forget about the non-cash charitable giving, right? So if you give all your old clothing to Goodwill or the Salvation Army or to the church, you get a receipt. That's also considered a non-cash charitable donation, and it adds to all your giving, and maybe then you're getting closer to that threshold that you need to be able to itemize, so don't forget that as well.
And we have several nonprofit thrift stores now that are up and, you know, asking for donations and all. And so you do have to be careful that when you fill out how much these clothes were worth, that they can't be
exorbitant.
No.
You want to be careful. So I'll just tell you.
That could tag them, right?
Yeah, we use a standard 15%. So if an item that you originally paid $100 for and you donate it to a charity and it's in good condition, then we usually take 15% of that as either the resale value or the fair market value. And that's kind of a standard that's been upheld by the service under audit.
That's very interesting, but that's a good thing to know, 15%. So I'll say, you know.
But I will say this, though, if you're donating a brand new Versace suit that hasn't had its tag taken off, it's probably worth more than 15%.
Right,
so
right.
Just know that that's just a threshold we use.
What about stock? What if you give stock? We hear people that do give stock.
Great idea. So if you own stock in a publicly, well, I can even say privately traded company. Well, let's just use Apple as an example. Pretty much everybody knows about Apple. So if you bought a share of Apple stock for $100 and you donated it to a charity 5 years later and it was worth $250, you get to deduct the $250.
You do.
And you avoid paying the tax on the appreciation from what the $100 you paid for it and the $250 that you realized the charitable donation for. So it's really a double bang for the buck because you avoid capital gains tax, but you also are able to give a donation and not have to write a check for it.
That is wonderful. All right, let me ask you this, or no, I'm not going to ask you this. I'm going to say that really I can't say that word.
Itemization.
Itemization and knowing and that 15% for anything you donate to, like Goodwill and all clothing, things like that. Those are two important things, but the tax laws are changing. I mean, we think they're going to change, so we've still gonna.
Well, if you bring me back this time next year,
I'll bring you back next Wednesday.
We may have a whole different conversation about what's deductible.
The way the president's working, it could be next Wednesday. We have something new. All right. If you have any questions on filing your taxes, you can reach out to Huffman and Company. There it is, right there. And Tony, as always, thank you so very much.
Appreciate it.
Great information.